FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today's September 14th, 2017. Email us at kl@kerrylutz. So obviously, we just got through a couple of cataclysmic hurricanes, but there's an economic storm that has been sweeping the globe really for the past 10 years, and perhaps we lose sight of it. Often you lose sight because you're absorbed in your day-to-day routine. But with us is Peter Schiff. You know him well. Peter called the real estate crash. And Peter, welcome back to the show.
Thanks for having me on. And yes, indeed, it is a Cat 4 economic hurricane that is forming and ultimately is going to make landfall here. I think it's going to make Irma look like a sun shower.
Yeah, well, that's saying a lot, although Irma didn't hit us as bad as it could have, at least as long as you weren't.
Well, it hit other islands. I mean, some Caribbean islands were decimated.
Yes.
And it's a lot of damage down there in the Florida Keys. I mean, it could have been worse, and thankfully it wasn't worse because of the fortunate turns that it took. But, you know, we were very close. But unfortunately, the real hurricane, the financial hurricane, is man-made, and we're going to hit the eye wall. I mean, the eye is going to envelop the entire country. Yeah. So, but people can protect themselves financially. You know, that's one thing that I can help people do by structuring their portfolios properly outside the United States, get out of the dollar, get into gold. You know, people were preparing for the hurricane. A lot of people evacuated. You've got to evacuate the dollar. You got to evacuate U.S. markets if you want to survive this thing.
Well, I have to tell you, you know, I'm not like an uber ultra prepper, but, you know, I've always had emergency food on hand. I always keep a few gallons of water, lots of flashlights, 10, 15, 20 flashlights in the house, battery backups for my cell phones. Or the whole plan, everything I prepped for, it all worked. So to me, yeah, you can't exactly know how the storm will unfold and exactly where it's going to hit first and how strong the winds, the financial winds, are going to blow the boats in the harbor. But what I did discover, and it was the first time I ever really had to use all my prepping tools, is that I was more prepared than I expected to be.
Yeah, and you know, financially, I mean, this is going to be a problem. At least when you're prepared, you can relax. There were a lot of people that were scrambling. They weren't last minute. What am I going to do? Oh, I don't have hurricane shutters, or I don't have hurricane glass, or I don't have any food. So the people that had everything together, you know, it was a lot easier for them. And it's going to happen the same thing financially. Believe me, if people are sitting back and they're just complacent and they've got their money in traditional investments in the U.S. stock and bond market, when this thing starts unraveling, they're going to be like trapped, like deer in headlights. They're not going to know what to do, and they're not going to have the time to do it. You know, that's why I've been so, you know, insistent that people prepare in advance, because that's the only way to prepare.
Yeah, so the carnage, the financial carnage, and the human toll is really going to be vast, unimaginable, like nothing else you've ever experienced.
Yeah, it's going to be much worse than 2008. I mean, that was the beginning, but, you know, that was the overture to the opera. But when the fat lady sings, believe me, you know, it's not going to be a pleasant sound.
Yeah, so we've learned absolutely nothing from 2008.
No, in fact, all the people that are professionals, right, in the finance, in banking, at the Fed, in government, that had no idea that 2008 was coming, right? They were completely blindsided by it. You would have thought they would have done some soul searching and said, hey, why didn't we know this was going to happen? I mean, what did we have wrong? I mean, you had guys like Schiff that were warning about it. So, you know, what did he know that we didn't? I mean, what do we have something wrong? You'd think they would have questioned their models. Instead, they questioned nothing. They just dismissed it as if it was a one-off event that nobody could have possibly predicted, that it had nothing to do with what they were doing, that they weren't doing anything wrong. It was just some kind of act of God that you have no control over. And so they went about doing exactly what they were always doing. And now they've made the problem so much worse, and they don't even realize that. Because they don't realize that they caused the last crisis. And so they're in the process of causing the next one, which is going to be much, much worse.
So it's kind of like they ascribed it to John Maynard Keynes' animal spirits. That's what caused the crash of '08, right?
Well, yeah, just, too much greed, too much capitalism, not enough government, not enough regulations, as if, more government would have stopped it. This was all a byproduct of government intervention. The free market would not have produced the housing bubble and the financial crisis. It took government to engineer that.
Yeah, well, in the good old days, before there was unfettered money printing, you could have a bubble, but you only had one at a time, right? You didn't have multiple bubbles in bonds, in stocks, in tech stocks,
right? And
in real estate.
Now they span the globe. It's not like the bubble is isolated to one area. I mean, we're now interconnected. I mean, so we have bubbles all over the world. So they're much bigger and obviously much worse when they pop.
Right.
And much more destructive when they're forming. Remember, when bubbles are forming, a lot of problems are being created. A lot of mistakes are being made. It's just that people don't realize that until they pop.
Yeah, and the salve, the multi-purpose salve of low or no interest rates is going to fix everything, right? And then
that's the fuel. That's the fuel for the bubble. Just like the hurricane was fueled by the warm waters, these bubbles are fueled by the low interest rates. The cheap money is what sustains them. But eventually, the cheap money runs out. I mean, they can't keep rates down forever. Eventually, the market's going to force them higher, and that's when all the problems are revealed.
And every time they raise rates, well, granted, the Fed made a few minor rate hikes, but when they really look like they're serious about it, the market falls off a cliff.
Yeah, I mean, they haven't raised rates much. I mean, rates are now back to like 1%, which is still historically low, where, it's only a little bit higher than it was because they were zero for so long. But, the Fed started cutting rates in 2008, and it's almost 10 years later, and they've barely raised them. I mean, they're still down 80% from where they were.
Yeah, it's crazy. And what about Europe, the ECB with quantitative easing? What's going to come of that?
Well, I mean, all these quantitative easing programs are creating problems. I mean, Japan has been doing it as well. I mean, it's really just a fancy word for printing money and monetizing debt. I mean, that's really all they're doing. They're just trying to make it sound like it's better than it is. Like this is actually an economic tool, some kind of smart financial thing that the central banks are doing. All they're really doing is what all banana republics have always done. Just run the printing presses to finance government debt. And it didn't end well for the banana republics, and it's not going to end well for the United States or Europe or Japan. All of these central banks are creating problems that are going to blow up. But I just think we've got the biggest bubble of them all. And I think the problems here are the biggest, even though I'm not going to ignore the problems over there. That's why when we invest internationally, we try to avoid all the bubble-blowing countries, all the countries that are doing the QE, really. With some exceptions, Switzerland is doing it. I mean, I still have some money in Switzerland. But, I mean, they've blown up their balance sheet. But at least they haven't used their quantitative easing program to buy their own government debt. They've been buying the debt of other governments and stocks. I mean, they're the largest shareholder in Apple now. I mean, the Swiss National Bank. So they've been printing up money to buy real assets, as opposed to their own government debt.
Now, I got a question from an FSN community member who said when Germany, Reichmark blew out, when it busted, when it went into hyperinflation, when they reset, people who owned German stocks were actually given parity, a one-to-one value on the new the Rentmark, I think Renmark came after the Reichmark.
Well, the Reichsmark, I don't know if there was something between the Reichsmark and the Deutschmark, but
yeah. There was
might have been a new Reichsmark, but if you own stocks, like if you own stock in Daimler, Benz, the companies survived. The people who got wiped out in Germany were the people that owned government bonds or bonds denominated in Reichsmarks. People that had savings accounts, they got wiped out. But if you owned a real asset, if you owned property or if you owned this company, then you still had something of actual value. And I think that same thing is going to happen again. A lot of people who think they're playing it safe, they have their money in their treasury bonds or even stuffed underneath their mattress, they're going to end up losing a lot of real value as the currency implodes in purchasing power.
Yeah, and of course, people who owned precious metals in Germany when the mark dissipated, they really were able to improve their lives.
If they own precious metals, or if they own Swiss francs or U.S. dollars or British pound sterling, I mean, so they could get out. That's what I'm doing with my clients today. I'm seeking out safer havens so we can weather out this storm. Right, I'm buying assets into countries that I think the currencies are going to hold up against the dollar. And, we're buying foreign assets, we're buying gold. The dollar is off to its weakest start since 1985 for a year. It's down over 10% this year, and I think it's going to have a very weak fourth quarter. So all of our strategies are crushing it this year. We beat the S&P this year. We beat the S&P last year. That's when our strategy bottomed out. But I think we're about to embark on the biggest dollar bear market ever. The last one lasted about 6 years. It was from 2001 to 2008. The one that started in 85, which was the last time we had a dollar this week to begin a year, that one lasted 10 years. So once the dollar starts to fall, it doesn't just fall for a matter of months. It falls for many, many years. And so I think, we're going to make a lot of money with our strategies. So people should definitely, check me out. You go to Europe Pacific Capital, europac.com, buy some gold. In fact, gold money is a great place to get some gold. A lot of people, unfortunately, have made the mistake of trying to ride out the storm in cryptocurrencies like Bitcoin and other currencies. I think those currencies are going to get wiped out before the dollar. So, they basically, they went away from the storm, but they went from Miami to Naples, and then they got hit, right? So they're jumping from the frying pan into the fire. So they got to, if you still own, I know that, the Bitcoin is down now about 30% in the last couple of weeks from its high. It's down, 10% today alone.
Right.
But there's still people with a lot of paper profits in these cryptos. Get out before the profits are gone. Get into some real money, some gold. And if you want to have gold that you can use online, if you want to be able to spend it, save it, and earn it the way that people think it's going to happen with digital currencies, but it's never going to, open up an account at Gold Money, because there you can buy gold and have it stored in a vault of your choice anywhere in the world by Brinks. But now you can have it in like a digital safe where you can spend your gold. You can give it to anybody you want anywhere in the world. They'll give you a free debit card if you want to access purchases with your Visa, MasterCard. But ultimately, I think a lot of merchants will prefer to be paid in gold. I mean, I would. If I'm a merchant, I'd rather get gold. Why not? People will be able to transact in gold. It's not going to work with these cryptocurrencies, but gold has always been money. It always will be money, and you can adopt it for the internet today with the Gold Money platform, so that it's never been easier to spend and save and earn in gold if you use the Gold Money platform.
Yeah, it makes a lot of sense. So your feeling on cryptos, do you think that blockchain has any value going forward into the future?
Yeah, I mean, blockchain is an interesting technology. I mean, nobody has a patent on it, so nobody owns the blockchain. It's just a program that anybody can adopt and work it into their business model. So I do think that there's some value in that, programming and that, but nobody owns it. And I don't think that owning these tokens, these cryptocurrencies that utilize the blockchain, I don't think they have any value on their own. I think people who think that they're buying into the blockchain by buying a Bitcoin, you don't own anything when you own Bitcoin except that Bitcoin. And what good is the Bitcoin? It has no actual value other than the fact that you can give it to somebody else. But if they don't want it, then what's it worth? Nothing.
Yeah, it all comes down to confidence. What about these ICOs that you see? I mean, you've been in the securities business your entire career, Peter. How does the SEC, how did they allow 1,000 cryptocurrencies to go forth and flourish as an end run around securities laws? Do you understand that? Because I don't get it.
Yeah, look, I don't think that they're securities, but, I think the SEC could easily define them as securities because the government decides what they want, right? And if they want to classify these coins as securities, then ICOs have to be filed and registered, and they have to do all the things that I would have to do as a security broker dealer. And look, I think, assuming that these currencies just don't implode on their own, eventually they're either going to be declared securities, or I think they're going to be declared contraband. I think that if the governments actually think that a lot of people are utilizing them for illicit purposes, or even just to evade taxes, a lot of people, want to keep their money hidden from the government. And to the extent that people are actually using Bitcoin to do that, at some point the government will just declare it contraband, and basically it'll be illegal. If you get caught with it, you go to jail. None of the merchants will accept it. None of the banks will transact with anybody that deals. The government could shut this stuff down in a heartbeat. But they may not have to. It may die of natural causes. The government doesn't have to kill it because it has flaws on its own.
And they might help it along by buying it at key times and selling it at key times. I mean, it's definitely...
Well, they could do that. I mean, and who knows? A lot of people think it's anonymous. I don't know. Maybe it's not. Maybe they're tracking. Maybe they know. I mean, how hard could it be? People use their credit cards to buy their digital currency. I mean, can't the government track that? I mean, they know our IP addresses. I mean, I don't know why they can't connect the digital wallet and figure out who it belongs to by going at your IP address and looking at other things that you're doing and trying to piece together. I mean, computer programs should be able to do this pretty easily, I think.
Hey, absolutely.
I think that, to think that you can do anything online and it's going to remain totally anonymous, that's part of the blockchain. It has a record of every single transaction. So all the government has to do is figure out which wallet belongs to who. I mean,
And how hard can that be? And they're monitoring everything. Look, they got Hillary Clinton's 33,000 so-called deleted emails. You got to figure they have everything else as well.
Yeah, and again, even if the government couldn't shut it down, it still isn't going to work because it's not going to be money. Because it's based on confidence, but people aren't going to make that leap of faith. I mean, the Bitcoin community says, well, people use dollars and euros and yen. They have confidence. Yes, they have confidence in those currencies. I think it's misplaced, but they have it. But you know what? That doesn't mean they're going to also have confidence in some cryptocurrency that was just created out of thin air. I mean, you're not going to have that kind of widespread adoption. And, you have a whole infrastructure using these currencies for centuries. You have people, prices are in these currencies, contracts, wages, salaries, rents, insurance premiums, taxes. I mean, all values are reflected in terms of these currencies. So there's a long tradition of use. So, people have confidence that it will continue. But why would anybody just believe that something that's never had value and never been money is all of a sudden going to be money? I mean, the confidence can go overnight.
Yeah, and the volatility undermines confidence in your medium of exchange. Hell, the dollar goes down 10%, and we're all up in arms like our purchasing power went down. It goes up 10%.
The dollar goes down 10% over 9 months. Bitcoin goes down 10% in one day.
Exactly.
But the thing is, though, a lot of the people that think that they acknowledge the volatility, but what they say is that, well, eventually, when it reaches a plateau level of, $100,000 or $1 million of Bitcoin, then the volatility is going to magically go away and it's going to be stable. I mean, why would that possibly happen? It doesn't even make any sense for me to try to bet on such a crazy thing actually happening. I mean, there's no reason to believe that would happen.
Well, Peter, human nature, a substantial portion anyway, or a large portion of the population likes to gamble, right? And
look, Bitcoin is like the perfect bubble. I mean, it's almost, people were afraid not to buy it. They were the fear of missing out. It was like a lottery ticket that you had to own. Yeah. The people who came up with it did a great job of promoting this. This could be one of the biggest pump and dump schemes ever. Most successful pump and dump schemes where a bunch of people got into the Bitcoin early on, bought up a bunch of them really cheap, and managed to convince a bunch of otherwise intelligent people that these things had value. And they were able to unload them at astronomically high prices relative to what they paid. But there are a lot of people who are going to lose a lot of money, unfortunately.
Unfortunately, it seems inevitable. Even if Bitcoin survives and Ethereum, there's over 1,000 of these kleptocurrencies here, Peter. Over 1,000.
Oh, yeah. I mean, you know what? And when no one wants them, what are they worth? Everybody wanted them when they were going up. Let's see how many people want them when they're going down. I mean, I don't know if this is the ultimate bottom. Maybe there's another leg up, but we're at 3,500 now. 2 weeks ago, we're at 5,000. If we break 3,000, then maybe we go to 2,000. 2,000 could hold. If we don't hold 2,000, maybe we go to 1,000. I say if we break 1,000, the party's over. It ain't going back up to 5,000. It's going down. And then we'll see, how much appeal they have when you're down 80% and, there's no bottom.
Hey, well, all I know is it was up to about 1,200 back in 2013, and then it went down to $187. Your stocks do that, and you want to slit your wrists. So it did it before. It could easily lose 80-90% of its value.
Oh, yeah. But here's the thing. It's created a false sense of confidence because people think, well, if it goes from 5,000 to 1,000, all I have to do is wait long enough, and it'll go from 1,000 to 50,000. But you know what? It might not. There's no guarantee that it's going to work again. It might have already happened, and that's the end of it. It might go to 1,000, stay there for a year or two, and then go down to 100, or then go down to 0. There's no guarantee it's ever going to come back.
No, there isn't. Well, I came up with a very great cryptocurrency I think is foolproof called tulip coins, and they're backed by Dutch tulip bulbs. I think.
Well, that would be an improvement over Bitcoin because Bitcoin's backed by nothing.
Yeah, exactly. Well, hey, what could go wrong if it's backed by tulips?
Like that. They have tulip coin, they have Ponzi coin, they got pyramid coin. I think. At least they're honest in their labeling and what the coin is.
Yeah, exactly. Well, hey, I know you're pressed for time.
I think there's even an FU. There's even like an FU coin out there.
That's the ultimate truth in labeling, right? So, hey, I know you're pressed for time. Where's the best place to find all these things you're talking about?
Well, look, goldmoney.com. Gold, just go there, open up an account, buy some gold, super cheap, and tell your friends. You can get referral fees for helping spread the word about a real substitute for central banks and fiat currencies that will actually work. You can get out of the banking system, get out of the U.S. monetary system, and put yourself on a gold standard in a way that's compliant with all the government rules and regulations, so you don't have to worry about the government shutting it down. Get a hold of me at my Europe Pacific Capital. If you've got a bigger portfolio, it's not too late to get out of Dodge. I can manage your account myself and my investment strategies and my mutual funds. Talk to one of my brokers at Europe Pacific Capital. Website is europac.com, EUROPAC.com. Follow me on the internet. YouTube, Facebook, Twitter. Listen to my podcast. I'm going to record another one today. My podcasts are up on schiffradio.com or my YouTube channel or, iTunes or any place that you can download and listen to podcasts. I usually do a couple of them a week. So make sure and follow me. You go, sign up for my, free newsletter and stuff on my website at europac.com. I put out a lot of content. It's very valuable. It's real news. The mainstream is spewing out fake news.
Yeah.
So if you want to know what's going on, then tune into me.
All right, Peter. And hey, any questions, comments for Peter or myself, just email us at kl@kerrylutz.com. Peter, be well, and we will talk to you again real soon.
Are you going to be in New Orleans?
I'm trying to make it, but I'm not sure yet. But all
right. Well, look, there I'll see you.
All right.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.